Welcome, everybody, to another Gold Silver Bitcoin show brought to you by GoldSilverBitcoin.com. We are more than honored to be sitting down today with Andy Lipow. He's the president of Lipow Oil Associates. Thank you so much, Andy, for joining us today.
Well, thank you very much, Justin, for having me back.
Oh, it's pleasure's all mine. So you have more than 30 years of experience, at least. It might be more than that now. I'm not sure if this has been updated, the bio, in the petroleum refining, trading, and consulting industry. So I want to kind of dig in, now that we're near highs, into what's going on in the oil market today from your vantage point.
Sure. Well, we're seeing crude oil prices rise to 7-year highs. We haven't seen $85 oil or so since about 2014. And this has really been driven by two things. First, on the demand side, we're seeing the world continue with its recovery from the pandemic. And the Omicron variant hasn't really been as dire for the oil markets as some people might have thought a couple of weeks ago. On the other hand, it's the supply side of the equation that has become the real issue. We've had a number of supply disruptions, whether it's flooding in Ecuador, impacting on pipeline operations, a blockade in Libya. At the same time, maintenance has been occurring in Libya, taking oil off the market, or the usual issues in Nigeria preventing oil coming back from the market. But in addition to that, what we've seen from OPEC Plus is, even though they're sticking with their plan to restore 400,000 barrels a day of production per month over the last couple of months and going forward to September of this year, they've been unable to meet that restoration target. And as a result, world oil inventories continue to decline. And that has really been the major story supporting the oil prices.
And what is the trajectory there? Will they continue to decline? Will there be a shortage even?
Well, until we see more supply come on the market, either with OPEC increasing their production in other than this 400,000 barrels a day, or we see a significant rise in shale oil production, which is still several months away, this trajectory is headed towards Brent being $90 a barrel. And many investment banks are saying, well, $100 a barrel is a target. And I should say that I agree, because once you pass $90 a barrel, $100 becomes this really big target, almost a self-fulfilling prophecy, because many investors do not want to miss the last run up in prices.
So there's a lot to unpack. Like, there's so much that's happened in the world over the last 19 months or so now, since March 2020, I guess, when oil demand just absolutely, I don't know much about the market, but I'm guessing in an unprecedented fashion collapsed. Can you speak to the impact of the lockdowns on the oil market and what happened then back in, early to mid 2020? Am I right to say that was totally unprecedented in terms of oil demand over the last, I guess it would be, I'll put it at oil demand like what, World War II?
Well, you're correct, because never had we seen on a worldwide basis oil demand fall by 30%, really due to something that was completely beyond the world's control. And when that happened back in March and April of 2020, we also saw some other unprecedented things, like crude oil actually trading at negative values. In other words, the futures market was saying, if you wanted to sell oil, you had to pay someone to take it off your hands. And this was a result of a lot of exchange traded funds getting into the futures market and people not realizing that you actually had to make or take delivery no matter what the price was. This was different than equity or a stock. When a stock trades at zero, the company is simply worthless and everyone would pack up their bags and go home. So that was one thing that was unprecedented. Another thing that was unprecedented is that the world oil producers couldn't respond quick enough to the lockdowns and the decline in demand that we had seen on a very short-term basis. And as a result, the oil market filled up every nook and cranny that they could for onshore tankage. And then they started taking oil tankers for storage and just sitting them around the world until either production was reduced or demand returned to soak up what was on those vessels.
Did that have any effect on the supply chain? Were there mass layoffs in the industry? What happened on the ground there?
Well, certainly there was a significant amount of impact in the supply chain. Of course, when oil prices started trading at negative values, even though they didn't last there for very long, they started trading at 10 to 20 to $30 a barrel for months. And that was unsustainable in the oil patch. And as a result, we saw a significant decline in drilling. The number of rigs declined by about 75% from their peak of over 1,000 rigs in action in the United States. And at the same time, we saw numerous bankruptcies in the oil patch, which then contributed to further layoffs and a reduction in the amount of oil coming out of the ground. Of course, as oil prices recovered, the industry has been slow to respond because they just saw the last couple of years of bankruptcies and no one making money. And in fact, if we look back to January of 2020, when oil was trading $63 a barrel, and we were producing over 13 million barrels a day, an all-time record here in the US, what we saw is producers were getting a lot of volume, but they weren't getting a return on their capital investment for those who had spent money in the oil patch.
Why were they at that point, I believe January 2020, not getting a return on their capital investment?
Because everyone had entered into the oil patch and oil prices were going up. While we had already drilled the best wells in the Permian Basin, they were now going to other locations in the United States where the well productivity wasn't as great. And when you have a huge amount of capital investment in the oil patch, clearly the cost of drilling that oil is going to go up as it attracts, more interest from people, and they're scraping the market for additional employees to help get that oil out of the ground.
So how do we get from that point to the point where we are today with oil at 7-year highs?
Well, the old adage that high oil prices cure high oil prices is once again true. Not only did we see a lack of investment here in the United States, but we saw a lack of investment overseas, where low oil prices meant that members of OPEC Plus certainly didn't have the money to continue investing in their oil facilities, and their production also declined, and that has led to today's situation where they try to restore production. But other than Saudi Arabia, Kuwait, and the United Arab Emirates, members of OPEC Plus have really shown their inability to restore production to pre-pandemic levels. And as a result, what you're seeing is higher oil prices that will eventually encourage additional investment.
And then what can we expect moving forward here? What's the overall environment? What are people thinking? Obviously, everyone's expecting, it seems, oil prices to go higher now. I think that not too long ago, people were not expecting all-time highs in oil in terms, if you kind of just like glance the headlines from some of the bigger institutions. I might be wrong about that, but now we're looking at inside OPEC. Views are growing that oil's rally could be prolonged. That came out this morning, an hour ago, in Reuters. Goldman Sachs also sees $100 per barrel oil, I believe. And then also there's some other news that we'll get into a bit later. So any comments on that?
Well, when the oil market is faced with declining world oil inventories, and that is certainly what we see around the world, here in the United States, not only have commercial oil stocks declined, but we've been selling out of the Strategic Petroleum Reserve. And since July of 2020, we've already reduced the Strategic Petroleum Reserve by over 60 million barrels, or roughly 12%. So until we see prices rise in the near term that trigger a demand response, or we get an additional supply response, I have to agree with many of these investment banks that the trajectory is still going to continue to be higher.
So what does that mean for you?
Well, what it means, number one, for the consumer is in these times, they're going to be paying more for gasoline and diesel fuel. And not only that, that contributes to the continuing inflation story that people see in their energy prices, as well as their food prices and other daily living costs. Not only do we have to contend with rising oil prices, we see this in rising natural gas prices, especially when there's a disparity in prices between here in the US, where natural gas prices are around $4.30 a million BTUs. But when you look at Europe, those prices are 8 to 10 times higher. And that results in people trying to switch from natural gas to oil, further exacerbating the demand pull on oil in the near term. And it looks like those high natural gas prices in Europe and Asia are not going away anytime soon.
So is it just up and up and up from here? And if so, then well, that's the question. Is it up and up and up from here for the foreseeable future?
Well, what I like to tell people is that I've been in the oil business long enough to see 6 oil booms and 6 oil busts. And we've seen, history before where oil prices have exceeded $100 a barrel, getting to $140 a barrel. And then we triggered a crash in oil prices from that peak all the way down to $40 a barrel. So what we really need to see is more oil come out of the ground, and these higher prices are certainly going to trigger more investment in the oil patch. But as you mentioned earlier, there are supply chain constraints. You still have to get equipment, you have to get labor. In the oil patch, you need trucks to haul around chemicals or water that's coming out of the ground at the same time oil comes out of the ground. And all of these things prevent a more robust response to prices. It's just going to take longer than we might have seen in the past.
So you've seen 6 booms and busts. Can you kind of describe what that's been like over the years?
Well, it's certainly been a roller coaster for how the oil prices have reacted. Certainly some of those oil busts in the early 80s, triggered a significant economic downturn in Houston. And then back in 2008 and 2014, when we had those oil busts, those were in conjunction with a banking crisis as well as a recession. So, very expensive oil prices are bad news for the world economy because it does trigger a response from the consumer that they spend less in other areas. And especially here in the US, where so much of our economy is driven by consumer spending, when they're spending more on energy and gasoline and diesel fuel, there's less money around to spend on other things like going to a restaurant.
So for the consumer now, what should they be expecting moving forward here? And what's the timeline that you have?
Well, unfortunately, in the near term, I don't really have good news on the gasoline price front. The fact is that the national average for gasoline is around $3.31 a gallon. And while we've been expecting that price to go down, unfortunately, the rise in crude oil prices have prevented that from happening. So I do expect that over the next several weeks, especially as we get into the summertime driving season, gasoline prices are going to rise another 10 to 15 cents per gallon. And really, the consumer should be blaming it on those higher oil prices and the lack of new supply that's coming to the market in the short term.
When is the summer driving season? What are the months?
Well, if you're in California, that summer driving season is about to start in February. It is right around the corner. For the rest of the country, that we transition through the spring and into the summer driving season, and that hits the terminal operators on May 1st, where they have to be in compliance with the summer driving season. So over the next several months, the refining industry is going to be transitioning to that summer season.
So on the ground for the consumer, they're looking at, so where I am, gas prices under $2 about a year ago. And now it's probably closer to $3.30. How does that happen in such a short amount of time?
Well, the context, as you point out, has been a year. And if we actually would look back at oil prices a year ago, we would see that they were around the low $40 a barrel range. So while oil prices have now nearly doubled, that already has contributed $1 a gallon to higher gasoline prices. At the same time, we've had some other impacts on a national level. Many states have been increasing their state excise and road taxes over the last year. And in addition, we have new environmental regulations that have been adding to the cost of gasoline and diesel fuel. And that cost is being passed on to the consumer in the form of higher prices.
So the oil patch is producing a record high amount of oil not too long ago. So let's put it back in 2019, maybe. Is that a good date?
Well, I would say as we exited 2019 and went into 2020, oil production in the US was close to 13 million barrels a day on a monthly average. Today, we're closer to about 11.7 million barrels a day. So you can see the impact that these lower prices have had. And once again, when oil prices plummeted back in the first part of 2020, producers just stopped spending money. And oil production actually, for a time, got below 11 million barrels a day. So we lost 2 million barrels a day of production. Much of that has been recovered, but certainly we're nowhere near the peak that we had seen in the past.
How crucial is the oil patch to the nation?
Well, I think it's very important for the nation on a number of fronts. Of course, when you add more supply to the world's demand, that helps temper oil prices. But I think as important is our foreign policy decisions can now be quite different, that the US is producing, over 11 million barrels a day, whereas 10 years ago, that number was closer to 5 million barrels a day. We are far less reliant on issues happening in the Middle East than we were a decade ago. We can adjust our foreign policy accordingly. Much of the rest of the world is now dependent on the Middle East, especially Asia, specifically China, on getting that oil out of the ground. Whereas in the US, well, we're exporting 2.5 million barrels a day. Some of it is going to Asia, some of it is going to Europe. You can see how our philosophy can now change.
Now that's world changing in a way. So energy independence in the U.S. can, I think, make for a more reasonable foreign policy. I think one that certainly the rest of the world would agree more with. Any other comments on that? Because that's like a massive topic, and it changes 75 years maybe of foreign policy, or at least let's take a step back. At least conservatively, we're looking at 30 years of foreign policy history.
Well, not only is it happening in the oil patch, but it's happening on the natural gas side as well, as we've built over the years a significant amount of liquefied natural gas export facilities, which has allowed us to connect with other parts of the world, Asia, as well as Europe. And when we look at the geopolitics of what's happening in Europe these days, Russia is just trying to put their Nord Stream 2 natural gas pipeline in service to deliver more natural gas into Europe. Of course, the US has sanctioned many companies that have been dealing with that Nord Stream 2 pipeline. But on the other hand, the US has been trying to supply more natural gas from the Gulf Coast and elsewhere to Europe so that Russia has less of an influence. And we can see this playing out, of course, in the geopolitics in Ukraine these days, with Russia amassing a significant amount of troops on their border. And we've got natural gas pipelines that are transiting Ukraine, from which Ukraine is collecting transit fees that are delivering natural gas into Europe. So we can see on a global scale how what the US is doing on its energy independence is now impacting other parts of the world in the current time, specifically Europe, but we also can see that happening in Asia. And on the other hand, in Asia, China is a very big net importer of energy. So they don't have similar cards to play like Russia, who is a major exporter of crude oil and natural gas, whereas China is a major importer of both those commodities.
It would be reasonable for US policy to promote production of oil, but you say that they seem to be discouraging oil production. Are they doing that, and why?
Well, when we hear the Biden administration talk, of course, they're moving towards more renewable fuels, solar, wind, trying to increase, the credits that are being deployed to that part of the industry. Of course, during his election campaign, President Biden talked about halting fracking and drilling permits, but we've actually seen a little bit of a different philosophy at the Interior Department where they have been approving many of the drilling permits. But the psychology in the oil patches were moving beyond fossil fuels, so they're reluctant to deploy capital into that part of the industry, especially when we have an administration that wants to move into other areas of energy supply.
But my read is that these other alternative energies are not ready to take the place of oil by any stretch of the imagination, especially in those developing nations. I think,
Well,
go ahead.
there's no doubt when we think about developing nations, fossil fuels is the cheapest form of energy for them. And when we think about, say, solar or wind power, you need to develop an electrical grid that can deliver it from those production points to the consumer. Many of these developing nations simply don't have the money to spend the tens of billions of dollars that it would take for those distribution systems. So in the near term, they're stuck with gasoline and diesel and that delivery to the consumer.
How sophisticated or how well developed are the alternative energy markets? And do you think that certain policymakers are depending on them too much or expecting them to carry too much burden of the global economy?
Well, when we think about renewable energy, we can take it in different aspects. We've got solar, we've got wind, and as you're aware, Texas is the number one wind generator of the states in the United States. But when you cross Europe, you do see a significant amount of wind farms being developed. In places where the sun is shining for the majority of the year, you see the development of more solar power. But what we also saw recently in Europe is as you shut down coal plants or you shut down nuclear facilities, and if you depend more on solar and wind, if the sun isn't shining and the wind isn't blowing, you end up in a crunch point because you've lost a lot of your base load energy supply. And that's the dilemma that we've seen recently in Europe. But I do believe that over time, we've seen these technologies become more mainstream. The cost of deployment will go down. But once again, here, even in the United States, wind power does depend on a certain amount of credits to spend that capital to install the facilities.
In Europe, I believe there's documents, official documents, which are categorizing nuclear as almost a green energy. So there seems to be a wider acknowledgement that nuclear is cleaner than we had heretofore acknowledged, and perhaps it can be deployed or innovated upon. But certainly, at least especially in Europe, which is surprising for me, they are taking an increasingly open mind to nuclear. So now, are we going to learn, like we are in nuclear, that oil is actually greener than it gets credit for being?
Well, I don't think there's any denying that when you're burning oil, which is made up of carbon and hydrogen, that you are going to put carbon dioxide into the air. That clearly is not the case when you're building a nuclear power plant. But I think a lot of the issues surrounding the nuclear power plant is, number one, people don't want it in their backyard. They're scared to death of the risk that you could have a catastrophic event occur at that nuclear power plant, say, like what happened at 3 Mile Island decades ago, or what happened in Japan at Fukushima, and people are just unwilling to take that risk. I think that, perhaps in the future, if we look at nuclear power plant technology, if it can be done on a smaller scale, then you could place it in more remote regions away from population centers. That would result in transmission line issues, but perhaps that's something to look forward in the future. I think the irony in all this, as you look at Germany and they continue to be shutting down, their power plants.
What's the real story about peak oil?
Well, I have heard about peak oil for the last several decades, and it looks like we're still not there yet. In fact, many of the investment banks think that we're going to continue to increase our oil demand to record levels over the next couple of years. And in order to displace that oil, you need to see a significant amount of displacement for transportation fuels, which may occur over the next 10 or 20 years with the proliferation of electric vehicles. I think the piece that hasn't been well thought out about the electric vehicles is where all that electricity is going to come from to power those cars, especially if people come home from work at 5 p.m., plug in their car, and then you're entering into the 2-hour peak electricity demand period around the country as people are sitting down to dinner, and you're have peak air conditioning demand about that time of day.
Okay, so there's a shortage. Now, how is supply increased and why is it not being increased?
Well, supply is increasing slowly, but as we've seen, when you're not spending money, the oil production starts to decline because we need a certain amount of investment in order to maintain our oil production. And you certainly see that happening in the Permian Basin and other shale producing regions of the United States, where you can drill an oil well, and what they call the initial production rate can be several thousand barrels a day, but it can decline precipitously over the next couple of years to only a couple hundred barrels a day. So you need to keep drilling more and more in order to maintain and increase those oil production rates. Meanwhile, if we look at other areas of the world, say the Gulf of Mexico, well, the cost of developing a deep water well is in the hundreds of millions of dollars. And not only that, what we've seen historically is from the time of discovery to the time of oil production, that can be about 9 years. So even additional discoveries in the Gulf of Mexico are a long ways away to satisfying consumer demand. And meanwhile, if we look overseas in Saudi Arabia, Kuwait, the Emirates, where oil production is really cheap, it's my opinion that these countries are really quite happy to see oil prices recovering, their budget are back in balance, their domestic treasury coffers are filling back up. And when you have growing populations in the Middle East, they need more money in order to satisfy those domestic concerns.
For those who are new to investing, like recently, since what's it called? They call them, let me think here. I want to get the official word right for what they call these. I guess they call them lockdowns, actually. There's not even a euphemism. Okay, so the lockdowns, we gave rise to the Robinhood younger generation investing, buying stocks and all this stuff. And I think that there's a steep learning curve that a lot of people that actually we as a society are dealing with. There's stories of people going on Robinhood, children, like 18-year-olds going on Robinhood, and then losing all their money and committing suicide even. But so there's definitely a learning curve with this younger generation and being able to essentially like just push a few buttons and make a trade. What do they need to know about oil investing in the oil industry?
Well, I think like any other investment, you need to do your homework. And number one is come to a view whether you think oil prices are going up or down. Because if you're going to be investing in a production company, whether it's Exxon, Chevron, BP, or the independents like Pioneer or Diamondback, their revenue and profitability really depends a lot on the price of crude oil and natural gas. And of course, on the other hand, they are beholden to the cost of getting that oil out of the ground. But what we've seen time in and time out is that as oil prices and natural gas prices go up or down, so does the history of these production companies. If you're thinking about in the oil patch refining companies, right, refiners are a margin business. They buy crude oil, they sell gasoline, jet fuel, and diesel fuel. And one has to decide, number one, is world oil demand increasing so that the assets that a refining company have, are they valuable? Or do we simply have way too much refining capacity in the world, which is what we saw when the pandemic hit and oil demand goes down. We saw a significant amount of refining capacity get permanently shut down. So in any of these investments, I would encourage people to do their homework. I'm a person who always thinks about this business in the supply and demand terms and what might happen not today, but out in the future, whether it's several months or several years down the road for long-term investment. Of course, in the oil market, when you're hearing, oh, crude traded $85 a barrel or 83 or 90, sometimes that has to do with a short-term event, some geopolitical issue or news headline came up, like the recent drone strike by the Houthi rebels in the United Arab Emirates got oil prices rallying this morning. So I think, for an investor, you can day trade or you can be a long-term investor. Many of those Robinhood investors were simply day traders. We saw day traders during the tech bubble.
In the precious metals industry, especially on the stocks equity side, there's different categories. There's like exploration. So there's certain companies that are only exploring, looking for new resources and commodities in the ground. And then there's production companies. And generally speaking, the production companies are probably a far more sure bet, since they've already found metals, for instance, and are pulling it out of the ground. Therefore, they have revenue. The exploration, they range from just sitting in a desk in Vancouver doing nothing to dealing with Mother Nature, which is complicated. Is there a similar corollary in the oil industry that people, especially new investors, should know about?
Well, I think, on the production side, I don't think it's as simple as, just, plunking down your money. We did see, when we had the pandemic, is these production companies, their equity prices, plummeted with the falling oil price. And we did have, many, many bankruptcies. One could look at a stock chart of, say, Occidental Petroleum, a very, very big producer in the Permian Basin, and you can see how their stock price reacted to lower and then higher oil prices. So, I think there's always going to be people who sit in front of a computer and think, well, let me just buy this company's shares or that company's shares. And there's always, ways to play the producers, whether it's on a day-by-day basis or a long-term basis. But I still would encourage people to, do their homework and take a view on the oil market.
Where do they start? Like, what are some of the websites that you're constantly looking at? What are the data points? You mentioned supply and demand. Are there any others?
So, there's a lot of good websites to start with. I first start with, here in the US, the Energy Information Administration. So they have a website that has lots of good articles. It talks all about the United States data. There's a lot of information available on that website. In addition, we have the International Energy Agency over in Paris that does reports on a worldwide basis, and they give you their opinions on the market. You know, a lot of the news wires, whether it's Reuters or Bloomberg, carry many energy stories that are available to the public, you know, whether on a subscription basis or just off their website, that you can get a sense of what's happening. And of course, for those who are interested, you can go to the Securities and Exchange Commission website and pull up the public filings of many of these companies. But sometimes you can get buried in all the legal jargon that's in an SEC 10K filing. So another very good place to get information is from the actual company's website on their investor presentation links.
Anything else on how people can get started in oil before we move on?
Well, I think those are the best sources to get, you know, started in the oil business.
Supply and demand, such an important concept to understand. And yeah, I think so few do, unfortunately. I don't know how that is, but it just seems that there's general economic confusion out there. Can you speak to the importance of supply and demand in the oil industry in particular?
Well, I am a big believer in supply and demand, and I think that the rest of the market believes that as well. And so, while, you know, supply and demand is impacted by geopolitical events, say sanctions on Iran, sanctions on Venezuela, the oil market continues to look at what is the global growth on the one side of oil and what is the global supply on the other side. And then during the course of time, we can have all these other events, geopolitical, political, supply disruptions, you name it, that can impact on the daily price of oil. But when you start looking at these longer term trends that the investment banks are looking at, they're thinking, you know, what is the general trajectory and what are the factors that can impact on either side of the equation? So we can have, on a day by day basis, a lot of volatility in the oil market. If you remember, we had, when the Omicron virus appeared, oil prices dropped $10 a barrel in an immediate reaction. And as the market discovered that the variant was not having as great an impact on the oil price, or oil demand, excuse me, prices then recovered. When we hear governments talk about strategic petroleum reserve releases, of course, that adds supply on a one-time basis into the oil market. We do get a price reaction that the market thinks about, and then prices quickly recover. So I think that, like any other business, supply and demand matters quite a bit in the oil patch.
Do you have any comments on economics and how you apply it to the oil industry? Perhaps there's a school of economics that has helped you over the years. Perhaps there's some economic thinkers who you've looked up to over the years that allow you to have a precision analysis like you do on the oil industry.
Well, I don't, you know, per se look at a lot of the economic theorists, you know, that are predicting the price of oil. There are many of them out there. Sometimes it's very difficult to trade on the economic theory because, you know, they may be right in the long term, but if you're looking at your investments and in the interim, your investments are going down, you may not have the wherewithal to sit around. This is especially true on the futures market, where you can buy futures with great leverage. But of course, every day at 10 a.m., if your position is out of the money, you have to come up with your margin call. So while we've seen oil prices on a trajectory going up, you know, suppose you had bought $80 oil several months ago, and in between then and now, oil prices dropped to $62 a barrel. you might have been forced out of your position before it's recovered to $85 today. So I think, one has to, of course, know what your time horizon is. But, the oil market, just like lots of other things, again, follows supply and demand. And you can think about this with other commodities, whether it's copper, nickel, platinum, palladium, sugar, or coffee, or cocoa, or even the agricultural goods like corn, wheat, soybeans. They react to supply and demand, but in those cases, they're highly dependent on the weather.
So now when you're looking at supply and demand, or when one is looking at supply and demand, I can't underscore the importance of cataclysms that can take place. So for instance, the lockdowns of March 2020, that's a massive cataclysm that had an effect on supply and demand across markets. So in the oil industry, for instance, over the last 50 years, we saw the 1973 oil crisis, what's also called apparently the first oil crisis, when the Organization of Arab Petroleum Exporting Countries, led by Saudi Arabia, proclaimed an oil embargo. Can you speak about the impact that had and what that was? And if we could see another similar situation here, especially as sort of geopolitics get seemingly increasingly bombastic, if you will.
Well, once again, in 1973, prior to, the embargo, we had oil selling for well under $5 a barrel. And then all of a sudden, we had this embargo due to tensions, once again, that was happening in the Middle East between Israel and its neighbors. And oil prices rose to, I believe, $11 or $12 a barrel. There was a tripling or quadrupling in price. We had the gas lines and things like that, but we had no response to that here in the US because our oil production, was rather low. These were in the days before the Alaskan North Slope oil production was even discovered. And at its peak, it produced over 2 million barrels a day. But you can certainly have more black swan events. If we remember in the 1990s, we had Iraq invade Kuwait, and we had an oil price response then. We had September 11th occur in 2001. Once again, we saw oil prices spike on that news. And when the oil market saw it wasn't an impact on oil supplies, prices came back down. When we see the attack on the Saudi Arabia Abqaiq production facility a couple of years ago, once again, there was an oil price spike. It didn't last very long, but once again, you might call these black swan events, but these black swan events are occurring with more regularity, especially as we see more armaments that are available around the world. And you kind of have a proxy war in the Middle East between Iran and its neighbors, through what's happening in Yemen.
Now, you're down in Texas. You're not too far from Mexico, which has just recently, I believe, bought an oil refinery in Texas, if I'm not mistaken. It's seeking energy independence. What's the significance of that?
Well, Mexico, we've seen, has had a significant amount of problems operating their refineries year in and year out. And as a result, they become a major importer of gasoline and diesel, especially from the United States. Now, President Obrador has decided that he wants to make Mexico more energy independent. And as a result, he's spending in excess of $11 billion to build a new refinery in Dos Bocas of about 340,000 barrels a day capacity. At the same time, they expect to close on their purchase of the Shell or the Deer Park refinery that they're a joint venture with Shell on January 20th, and it's got a capacity of over 300,000 barrels a day. So between these two refineries, Obrador is thinking he will be able to use the crude oil production from Mexico, process it at these refineries, and return the products back into Mexico, thereby becoming energy independent.
So AMLO is kind of zigging when everyone else is zagging. So these massive transnational corporations that are in the oil industries are investing in renewable energy, and it seems that Mexico is now lessening their investments in renewable energies and increasing their petroleum production. Do you think that's a good idea?
Well, that's what they deem as a good idea because they have the natural resources in the ground to convert to transportation fuels. If you're in that kind of a situation, it probably makes less sense for them to invest elsewhere because they have this natural resource that they simply want to monetize.
Any other news in the oil industry right now that people are missing or misinterpreting or that you are keeping an eye on?
Well, I certainly continue to watch the events in the Middle East, especially if the United States and Iran, through their intermediaries, are going to come to some sort of agreement on Iran's nuclear power plant, or excuse me, nuclear program. On the one hand, at the same time that Iran wants all sanctions to be removed. So we seem to be at an impasse these days, and I think the market is sort of given up trying to handicap when Iranian oil is going to return to the market. The same thing can be said about watching what's going on in Venezuela, where Maduro still remains in power. The opposition, led by Guaido, still seems to have made no progress in getting him removed. And once again, Venezuelan oil production, remains at low levels. They're being faced with sanctions once again. China is their main buyer. But these are two items that I would look at over the next coming months to see if we make any progress.
Why can't these governments produce oil?
Well, Iran can produce oil, they're just limited by sanctions. And what you're simply seeing is Iran is selling more oil to China at prices that are attractive, namely, they're discounting their price relative to the competition. The same thing can be said in Venezuela, although the investment in Venezuela has deteriorated over the years such that they're having production problems. But once again, they, like Iran, are simply selling to China. And I think that, China just doesn't feel like the US is going to sanction China in a major way because our economies are so inextricably linked.
In what's been dubbed Chimerica. So our sanctions on Iran are benefiting China via lower oil prices?
Well, they certainly are because the two have found themselves. Iran needs to sell their oil and China needs to buy oil for their economy.
So this is called a second order effect or a cascading effect. It's a really fundamental concept in economics, I think, as I reviewed basic economics, or rather probably learned economics for the first time because I can't remember learning too much in public school. But with that said, can you speak to that and why we're helping China get cheap oil?
Well, I don't think it's so much that we're helping China, it's that China is taking advantage of a situation where the US is imposing sanctions on both Iran and Venezuela. And China feels that, they can purchase that oil at deeply discounted rates and suffer no repercussions from the United States.
Kazakhstan, what's going on there and what effect has that had on oil?
Well, we've seen a very limited impact on oil when there was a momentary disruption in some oil production. But once again, one would have to be concerned that this is another one of those geopolitical events where you actually could see, a supply disruption, whether it's at the producing site or in the pipeline grid delivering that oil, into Western Europe where something could happen. I think we should be concerned that you're seeing Russian troops now in Kazakhstan. You're seeing Russian troops on the border of Ukraine. Could this lead to a wider geopolitical issue between Russia and the west of Western Europe?
A new Cold War, perhaps, or what are you thinking?
Well, it's hard to see how this is going to play out, especially when Europe is so dependent on Russia for its natural gas at the moment. So Europe needs to develop alternatives to Russians' supply of natural gas. On the other hand, Russia needs the euro and the dollar in order to monetize those fuels to support their domestic budget.
Okay, so just a couple of questions and we'll wrap up here. Now, in the movie Deepwater Horizon, that problem is portrayed as the executives came in and wanted to do something at the mine there, the rig, and the engineers had some questions about that, but they went ahead and listened to the suggestion of the executives, and it led to the tragedy. Can you speak to that movie? Is it accurate? How does it portray the oil industry? Any comments on it? Have you not seen it perhaps?
Well, I haven't seen it, and since I don't know all the details of what caused the explosion, it's really hard to make a comment as to what was going on.
And then have you ever seen There Will Be Blood? And did you like it? Does it portray the oil industry accurately back in the
Well,
day?
I haven't seen that movie either, so I can't comment on its accuracy or not.
Any other comments that you think people, especially younger people, should know about the oil industry in the 2020s?
Well, I think, one thing is that the oil industry has been around for quite some time, and it's still going to be around for quite some time in the future. Maybe perhaps not the demand that we saw here in the US over the last couple of years, but there's many places overseas where gasoline, jet fuel, and diesel fuel is the fuel of choice because it's transportable, it's easy to deliver to the consumer, and it's affordable. And one thing that we've seen is that the consumer wants affordable energy prices.
We've had the honor of sitting down today with Andy Lipow. Andy is the president of Lipow Oil Associates. Thank you so much, Andy, for joining us today.
Thank you very much for having me, Justin. I really appreciate the time.
Pleasure's all mine. Thank you so much. And thank you, everyone, for listening.